Into trading hour, let's get a corporate conversation going now. Gateway Distriparks is in focus on the back of the second quarter earnings. So the revenue growth has come in at 11% versus last year, but margins have seen a contraction around 80 basis points down to 25.9%. The company also saw good growth in the profit after tax, but this was aided by lower depreciation and tax credit also. So to discuss more on this, we're joined by Prem Kishan Gupta, the chairman and managing director of the company, to take some questions. Mr. Gupta, thank you very much for joining us on the show today. You know, we're well into Q3 as well. So just give us a sense of what the transport situation has been on the ground, because you have guided for double-digit growth for the full year. Do you think you can still achieve that?
Well, we are facing some challenges in the export direction. And because of that, there is imbalance. Imports are still heavy, but then there is a limit to getting the imports into the locations. So just to tell you that the flagship terminal ICT Gadi Hasru has shown a double-digit growth, whereas other two locations in the north have seen some decline in the volumes, and that's because of the export of various commodities and other things which go out of those locations. Going forward, we are having a good traction of exports also, and our laden containers movement is going up compared to the empties. So I think we will gain the margin back in the coming next 2 quarters or the balance half of the year. And imports, as I said, still look good. Exports, we have to attract at the locations where we are lacking. And otherwise, generally, the revenue and the margins and the profitability and in the rail segment is still going up, whereas we see a flat performance in the CFS business.
Mr. Gupta, you're saying that you're facing some challenges on the exports. I just want to understand, do you see this normalizing in the next, 1 to 2 quarters? When do you see that happening? And because of that, do you think there's any challenge to achieving that guidance that you mentioned of double-digit growth?
Well, it all depends on the macros, because the export has been lagging for some time now. During August and September, we saw a decline in exports. In the month of October also, it hasn't picked up, but we see something coming up in this month and next month. And Q4 has always been the best. So I think we will be close to our guidance of a double-digit growth in the second half of the year.
Okay, so you're retaining that guidance. Hopefully things pick up in the second half, Mr. Gupta. Got that. Also, I think earlier you had said that the total volume growth across all segments, when all put together, you should be doing 10 to 15% volume growth. Is that range still achievable?
Yeah, in the rail we have about say 9% growth, whereas in CFS it is flat. So if exports pick up, we'll definitely have double-digit growth in the rail business.
Okay, got that. Let's talk a little more about your capex plans, because a couple of brokerages on the street were penciling in a capex spend of say 500 odd crores over the foreseeable future. What can you guide? How much will you be spending this year, and more importantly, as we get into FY25?
See, we have given a guidance of 300 crores of capex in the next 2.5 years. So we have already spent about 30 crores, 30 odd crores this year, and 30 odd crores in the last fiscal for the Jaipur facility. So we continue to do that, and we will be spending say another 50 crores in this financial year. And in the next 2 financial years, our guidance is for another 250 crores of capex, which will be for 2 other terminals and the normal capex of equipment and vehicles and replacements and maintenance and repair.
And this is all through internal accruals?
No, it will be partially through debt, partially through internal accruals, because we are paying off our debts regularly on time. And by the time we have these capex requirements, we will have our own funds also, and at the same time, the leverage will go down, and we borrow say about 50% of the requirement through loans.
Okay, since you mentioned that it will be a mix of internal company cash and some borrowings, Just give us the borrowing levels right now. What is the debt equity ratio now? And once you look at this capex going forward, where will it kind of stabilize at 2 years down the line by the time you are done with this capex?
See, we have a net debt of about 315 crores as of September 23. So we will be at a net debt of about 250 crores by the end of this year. And as we progress, our cash accruals will also be there. And at the same time, our debt will go down. So we will borrow at an appropriate time using our cash reserves first, or the cash accruals first. And so our debt will not increase. It will not be more than 1 to the EBITDA.
Okay, that will not go up beyond this. Just one final question. Do you plan to, is there any kind of plan to increase stake in Snowman Logistics? I know the promoter stake in March was around 40.25. In June, it went up. And currently, it's at around 43. So is there any plan to increase that stake?
Yeah, we have been saying that we will be acquiring Snowman shares, depending on the cash liquidity at GDL. We have bought in the first half to the tune of about 21-22 crores. And according to our cash flows, we will be buying every quarter. And we will go on, keep on acquiring under the creeping acquisition regularly.
All right, Mr. Gupta, we are going to leave it at that. Thank you very much for joining us and taking us through your performance this time around, as well as the outlook ahead. It has been a bit of a challenging quarter, but they are holding on to their full year guidance in terms of growth, also expecting margins to pick up a little bit. And on Snowman Logistics, they are saying that the promoter stake will go up from here as well. It is time for a short break on the